Okay, now for today's video, I'm going to be going over breaker blocks. This series has currently covered liquidity, fair value gaps, equilibrium, and now we're going to be moving on to breaker blocks, which is an entry model that I have used previously. In my opinion, it is one of the most simple models to actually learn. I got funded with Top Step using this model, trading NASDAQ. Yeah, I believe that it's a very good model to learn as a beginner. Now, as I'm going through this, I would advise having your charts up on maybe another monitor if you have one, or just go back and forth from YouTube to the charts. Try spotting these patterns on the charts. But yeah, so I'm going to get into it now. So essentially what you're looking for with these breakers, I'm going to go over the bullish one. So let me just mark this up as the bullish so we don't get confused. Okay, so here's our bullish breaker, here's our bearish breaker. Now, the best way that I learned these, this is how I got taught them, was marking out the points A, B, C, and D. So essentially what you're looking for is a low, a high, a lower low, and a higher high. Okay, so right here I've got all these points marked down, A, B, C, and D. So essentially what you're looking for is your low, your high, and your lower low, sweeping this previous low. Then your higher high, sweeping the previous high, and then your retracement back to the high. You can tend to see a big reaction off point B. So essentially you'd be looking for an entry point right here, which would be point E, E4 entry. Okay, so I'm going to be finding some demonstrations in the market and how you guys can spot them yourselves. In my opinion, having backtested these and traded these myself, I think the best time frames to trade these on are the 5-minute and the 15-minute. This is just where I found the most conviction and the best trades and the highest win rate. So yeah, now you can also use these on the higher time frames, such as the hourly, 4-hour, daily, and the weekly even, but I've never really used them on the weekly. I'm sure they work there. So right here, as you can see, we have our low in the market. So this is a bearish breaker, so we've got a high, low, higher high, lower low, retracement back to the breaker, and our reaction lower. So I'm just going to mark this up right now as our breaker. Okay, so right here, this is our bearish breaker. Our high got swept by this high, and our low got swept by this low, which is now our entry point. Now, another thing that you can pair up with this is using fair value gaps, liquidity sweeps, and equilibrium. So these are the videos that I have just posted. So if you've watched them, then you'll know right here we've got our liquidity sweep. We've had our raid on this swing high, and what we've got down here is a swing low. Now, as you can see, this is the hourly time frame, so I wouldn't be entering this trade on the hourly. I would be looking for the reaction of this, and then I would be going down to a lower time frame to be looking for an entry point. Now, another thing that I've gone over is our fair value gaps. As you can see, we've got a bearish fair value gap aligning right here. So combining your bearish breaker block with a fair value gap, creating a much stronger entry. As you can see, once price has fed up back into this high, taken out this low right here, we validated the breaker block. You could have been looking at a trade to take off this right here. Stop loss above the swing high, target in the swing low. This is what you'd be essentially looking for on a lower time frame. However, this is the hourly, so I would be dropping down onto a lower time frame, looking for an entry model, potentially the 5-minute time frame, looking for a break and retest. That is currently what I am trading. And I will be going over that model in a different video. So right here, this is an A+ model in my opinion. We've got our sell side liquidity sweep, higher time frame. We've got a high, low, higher high, lower low, retracement back to the breaker, and we filled an hourly fair value gap, and then we've had our raid on sell side liquidity. So this would have been perfect. Okay, so now I found another bearish example. Right here we have our high, we have our low, we have our higher high, and our lower low. So our lower low was putting down here. This was created on a new day opening gap, but as you can see, price has come higher to fill this breaker block right here. We have our obvious sell side liquidity down here. So what happens once we feed back into the breaker and into this gap here? It sends price lower. Okay, so right here I have found a bullish one. We have our obvious low in the market here. We have our low in the market right here. We have our high. So low, high, lower low, higher high, retracement back to this, and we've wicked it multiple times, sending the price higher multiple times. Okay, so right here, your low, point A, point B, point C, point D, our retracement. Could have been looking for long in opportunities inside this retracement here. Now I have just checked this trade. We have a bearish SMT right here with ES. Now you may not know what these are currently, but I will be going over these in another video soon. And this is why we have failed to displace up to this high due to this bearish SMT. There's your bullish breaker. Now I'm going to be dropping down to a lower time frame and a different pair. Okay, so right here on XAU USD on the 30-minute time frame, I have found another setup. So we've had our sell side liquidity sweep here. I found another setup. So as you can see, we have our high, we have our low, we have our higher high and our lower low. So this low now becomes the breaker block. As you can see, price is traded through up into this breaker block, pairing it up with a 30-minute fair value gap. And now we've had our displacement lower. Okay, so this one was perfect. And as you can see, on the higher time frame, we're also delivering from this fair value gap. So pairing it up with different confluences, I found has worked really well. We've also inversed this fair value gap here to the downside. So you can see that most likely order flow is stepping in to be bearish, delivering from a bearish PD array, disrespecting a bullish PD array, displacing down to the downside, creating our lower low, which could have been your target. This sell side liquidity down here could have been your target for this trade. Obviously you're not going to be trading strictly just from this breaker block on the 30-minute time frame. You're going to be dropping down to a lower time frame around here as soon as price taps into this, looking for your entry, and this will have been your target if there weren't other ones down here. So we've got this sell side liquidity right here, which we could have also targeted. Now also using equilibrium of the range, like I said we would be. Look what else has happened. This, I showed this on the previous video. Prices come lower, swing high, swing low, come wicked equilibrium. So there's another confluence for shorts, tapped into the premium side of this fair value gap, and this has just worked off perfectly. So as you can see, I am using concepts from 3 videos I have already taught, and I am pairing them up with this new concept that I'm teaching. We've got our inversion fair value gap, we've got our liquidity, we've got our swing high, swing low, creating the range for your equilibrium. Price is wicked equilibrium. This would have been a perfect shorting opportunity right here in the market. And as you can see, we displace lower perfectly. Okay, so I have this structure on the 15-minute time frame now on XAU USD. And what I've noticed, we have a low right here. Let me just draw out the structure. We have our low, high, lower low, high, high. Price consolidates. And what does it use support off? This bullish breaker right here. Now this is quite a small one. However, it shows you that it doesn't matter about size. So right here, we also have our fair value gap. 15-minute fair value gap. I'm sure this would have been a higher time frame fair value gap. As you can see, we've had a nice manipulation candle higher, manipulation leg higher. So I'm sure this would have been an hourly fair value gap, 30-minute fair value gap, one or the other. And we have gauged support off the lower portion here. Now, okay, so now I'm on a different pair, same time frame. I'm using the 15-minute time frame for this. Now I'm on Apple, so I'm just trying to show you how this works on options as well. So I've just looked at this for a split second, and I've seen that we've got our low here. Drawing this out, so for our high, low, higher high, lower low, right down here you have an intermediate term low. As you can see, is resting inside this 15-minute fair value gap. Perfect target. I went over what intermediate term lows are in my other videos, the first video of this playlist. So there's your intermediate term low. We also have our 15-minute fair value gap right here. Look how perfectly this has been being respected. Here's our breaker block right here, this low down here. So once price has tapped into this breaker block right here, high, low, high, high, lower, low. We've tapped in here, we've got a reaction lower, and we've also tapped in here, and this has given our displacement to take out this intermediate term low. This one is perfect. This is an A+ breaker. This is a potential, this you could have found a potential entry off this. Okay, so that's going to be all for today's video on breaker blocks. I hope this video helped. Just remember, if you're still struggling to find the pattern, look for an obvious swing low, followed by a high, a lower low, and a higher high. What helped me was naming the points A, B, C, D, and then E for entry. Once price comes back to your high, so you got your low, high, lower low, higher high, A, B, C, D, E at the entry of the high, targeting liquidity. So yeah, this is quite a simple model. If you combine this model with a fair value gap, it then becomes something called a unicorn model, which is even stronger than a breaker block. It's just, so I'm just going to go over this really quickly. So you got your low, high, lower low, higher high. As you can see, this high is aligned with a fair value gap. This is a perfect one. Now this would be no longer a breaker block, it would be a unicorn model because it is aligning with a fair value gap. Low, high, lower low, higher high, A, B, C, D, entry. So now I've gone over that, you've learnt 2 different entry models today. You've learnt your breaker blocks and your unicorn model, which is the same thing, just combined with a fair value gap. So yeah, that's going to be all for this video today. I'm going to be making a video on psychology for the next video of this playlist. It might be quite a long one, as understanding psychology as a beginner trader is going to set you up for success, and it's going to speed up your process by a lot. So I'm not too sure when I'll be releasing that. It might be either next video or the video after that. But for now, if you've been following every video of this playlist, you will be able to understand. You will understand fair value gaps, liquidity, breaker blocks, and equilibrium.